Hi everyone, welcome back to my channel. Today we're going to tackle an interesting topic that's on many people's minds every 4 years, the US presidential election and how it affects the real estate market. Whether you're a homeowner, an investor, or just considering buying or selling, understanding how elections impact real estate can give you a valuable edge. So let's dive in. First things first, let's start with the big picture. Every 4 years, the lead up to a presidential election can create a bit of economic uncertainty. When there's uncertainty, people often become more cautious about making big financial decisions, and real estate is no exception. Even though the president doesn't directly control real estate prices, their policies and even campaign promises can influence the market in many ways. One of the main ways elections affect real estate is through interest rates. Now, it's the Federal Reserve, not the president, that controls interest rates, but the president's economic policies can indirectly influence the Fed's decisions. For example, a candidate who plans on increasing government spending could push the Fed to raise rates to keep inflation in check. Higher interest rates make mortgages more expensive, which can slow down the housing market. So during election years, many buyers and sellers keep a close eye on the Fed's moves. If rates are likely to rise, some people may rush to buy or refinance before rates go up, while others might hold off if they think rates could drop under the new administration. Tax policies are another key area where elections can impact real estate. Candidates often have different stances on tax breaks related to home ownership. For example, the mortgage interest deduction and capital gains tax exemptions are two big incentives for homeowners. If a candidate proposes to cut these deductions, it could make homeownership slightly less attractive, particularly in high-cost areas. And it's not just homeowners who are impacted. Tax policies can also affect investors. For instance, capital gains taxes or policies on 1031 exchanges, where investors can defer taxes on investment property sales, are often topics of debate. These decisions can impact investment strategies and the market as well. Elections can also influence housing prices and inventory, though the effects are usually subtle and vary by region. In some cases, if there's a lot of uncertainty around future policies, you might see a dip in buying activity as people wait to see what happens. This can lead to slower price growth in the months leading up to an election. After an election, though, we often see a shift as people get clarity and return to the market. If the new administration has policies that promote home building or make housing more affordable, that can eventually increase the housing supply and stabilize prices. For investors, presidential policies on economic growth, employment, and business regulation are crucial. A pro-business candidate may boost the economy and indirectly real estate demand. Higher employment rates mean more people are able to buy or rent homes, which can increase the demand in the housing market. Alternatively, a candidate focused on heavy regulation might slow growth in some areas, which could affect real estate values. Investors often take these factors into account when deciding whether and when to buy. Another interesting point is that election outcomes can influence the market for second homes and vacation properties. If a candidate promises lower taxes, for example, some people feel more financially comfortable buying a secondary property. However, if taxes look like they're going up, people might put off buying the extra home. Second home markets often see increased interest during times of economic stability and optimism. So if the economy is expected to improve after an election, that could lead to a boost in these markets. So what does all this mean for you? Well, the real estate market tends to react in cycles, and while elections play a part, they're only one of many factors. If you're looking to buy, sell, or invest, it's essential to focus on your personal goals and long-term plans rather than just short-term election year dynamics. My advice during election years, keep an eye on interest rates, follow any proposed tax policy changes, and stay informed about economic trends. But remember, the best time to buy or sell is when it aligns with your life and financial goals. If you're considering a move or an investment, let's discuss a strategy that works for you, no matter who's in office. Thanks so much for watching. I hope this gave you some insights into how the presidential election can affect real estate. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss future videos. And if you have any questions about buying, selling, or investing during an election year, feel free to drop a comment or reach out to me directly.